Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate that. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want to follow me when I'm not on the YouTube channel, get down in that description box. Click on that Richard Fain Millionaire Mentor Instagram link and give me a follow on Instagram. And then send me a DM to let me know you're rocking with me. I certainly would appreciate that. You guys know I used to have a much larger Instagram page, Richard Fain 28. That Instagram page is disabled, no longer working. So I had to create this new Instagram page, Richard Fain Millionaire Mentor. And it's been going great. I got about 4,000 folks that have migrated over from the old Instagram page to the new Instagram page. And a lot of you guys have migrated, well, not really migrated. You went down in the description box, you've clicked on the Instagram link and decided to give me a follow. And I'm gonna be posting over there a lot more, guys, as soon as I start getting the page up with some more followers. We'll start doing some more posts. Right now, we're doing okay. I'm putting up some stuff about the cars, putting up some stuff about the financial, opportunity we're gonna be talking about today with Nvidia and another surprising company that I'm gonna be throwing in the mix today as well. Alongside Nvidia, there may be an opportunity for this company as well to hitch your financial wagon to another thoroughbred, right? Different industry, but definitely a thoroughbred in its own industry. So we'll talk about that company too, along with this great opportunity to get involved with a great company like Nvidia. And we'll get into that in a little bit. So yeah, get down to the description box, click on that Instagram link, Richard Fain Millionaire Mentor Instagram link. Go over to Instagram, give me a follow, and then send me a DM to let me know you're rocking with me. And I want to say thank you because I am trying to get the new Instagram page going. And it's been great. Like I said, I've been concentrated on like a month or so, and you guys have been kind enough to come over and give me a follow, and I'm trying to put some good stuff on the Instagram page. I just, did a little bit of reel on my new Audi R8 V10 Performance. It's a spider, and a lot of you guys have watched that reel, and it's been doing pretty good, and you guys really like the R8. So thank you for that. But I'm gonna keep it coming, right? More lifestyle stuff, and of course, always financial stuff to help you get to your pot of gold at the end of the rainbow. So if you like that, get down to the description box and click on that Instagram link and give me a follow. Second thing, website. Website's been up about 5 weeks, doing great. Over 150,000 of you guys have went over there to check out the website, all organic, because I don't pay for any advertising or anything like that. It's just through me talking about it on my YouTube channel. And over 150,000 of you guys have already went over there to check it out. And a lot of you have made an investment in yourself by purchasing digital products to help you collapse time frames and get to your pot of gold at the end of the rainbow quicker. And that's been fantastic. So every day you guys are going over, looking at those 10 hand-picked digital products that I picked myself, and you guys are taking advantage of them. Because here's the thing, guys. The biggest investment you'll ever make in your life, more bigger than investing in Nvidia, more bigger than investing in ETFs, more bigger than investing in any real estate deal, any business. The biggest investment you can make is in you. You're the key. If you're gonna build wealth, it's gonna be about you and your ability to have the right mindset and your ability to execute. And the only way you get laser focused when it comes to execution, you have to be confident in your decision-making ability. You have to become very confident in your decision-making ability. It makes you become a better executor. So you are the biggest investment you can make. I don't care what investments are out there. If you don't make an investment in you to get yourself to a point where you have confidence in your decision making, you'll always sit on the sideline. How do you get confidence in your decision making? Through knowledge. How do you get knowledge? You go seek out people like myself and others. You go seek out information from websites, things of that nature, and you start applying that knowledge to your financial life. And then that helps you become a better executor. That's what my website does. It helps you become a better executor by utilizing the digital products. See, these digital products, guys, everything from credit repair, credit restoration, increase your credit score, how to invest in the stock market, right? How to start an online business, how to grow an existing business, how to change your mindset to more of a millionaire mindset, how to become a better money manager through personal budgeting. All of that stuff is on the website, guys. That's the step by, oh, here's a big one. Investing in real estate with little to no money down. That's on the website. See, that information right there is all step-by-step stuff, man, that you can keep in your archive and go back and refer to, right? Because if you come ask me a question, I'm going to refer you back to the website. That's the whole point of me having the website. I don't want to be the encyclopedia. I don't want to be Google, right? That's not my job. I don't want to be Google. I don't want to be an encyclopedia. I want to be able to empower you to be your own search engine, to be able to go out and find information and then execute, right? That goes back to my premise of what? Not giving you a fish, but teaching you how to fish. It's a difference. Someone gives you something, they give you for one day, right? Somebody teach you something, now you go out and do it for the rest of your life because now you got a learned skill. Going over to the website is going to give you a learned skill. It's going to help your confidence. When your confidence goes up, you're going to become a better executor. That's how you get to wealth, guys. So check out that the website, www.richardfain.net. Second link down in the description box. Go check it out. Hey, check out the digital products and see if they're a right fit for you. I think they are. But it'll be an investment you'll need to make in yourself, right? Also, if you want to, you can also go ahead and sign up for the private mentorship club. Right now, we got almost 500 people in there. It's rocking and rolling. We got a live stream, a private live stream tonight at 8 p.m. Eastern time. No more live stream Q&As on YouTube no more. I've been cut those out back in May. Not doing them anymore, right? Only live stream Q&As I do are through my private mentorship club. That's it. You won't see no more Q&As on YouTube or nowhere else. Only in the mentorship club. What does that look like? That's 90 minutes where the people that are in my private mentorship club get to ask me questions. And I get to use my 30 years of experience buying real estate for income, selling real estate for big profit, investing in the stock market for big profit, starting businesses, side hustles. Plus, I was in the banking industry for 25 years as a commercial lender. So I've worked with hundreds and hundreds and hundreds and hundreds of millionaires, lending them money to leverage, to buy more assets. That's what I did when I was a banker. I worked with affluent clients. And over that 25 years of working with those affluent clients, I learned a few things. And that's what I share with the folks that are in my mentorship club. That's the only where I share that information, guys. The information I give you on YouTube is great. I love it. I love YouTube. Amazing platform. But that's all it is information. You don't have an opportunity to really ask me any questions. Get over to the private membership club, the mentorship club, through my website. That's where you get to have me one-on-one. Whether it be through the 90-minute private live stream Q&As, whether it be through direct message, whether it be through the community chat, whether it be through the various posts that I make every day. You get access to a community of people who think like you. They're trying to get to that pot of gold at the end of the rainbow. And those are the people you need to be surrounding yourself with. if you plan on getting to your pot of gold at the end of the rainbow. So get over to the website, www.richardfain.net. Check out those digital products, and then consider joining the private mentorship club if you want a little extra oomph, right? If the YouTube channel is all you need, perfect. Go execute. If it's not and you need that little extra oomph, you might want to check out the private mentorship club through the website. Last thing, Moo, my self-directed brokerage app that I'm going to be using over the next 10 years to triple my net worth. Whatever my net worth is today, I'm going to triple it. And I'm going to use the Moo app to buy the paper assets to triple it, right? Paper assets like SPLG, FTEC, Magnificent 7, Nvidia, and then one more mystery stock that I'm going to be adding to the portfolio that I haven't told y'all about. I haven't told anybody about this. Y'all will be the first one to know this mystery stock that I'm getting ready to add to the portfolio. Can anybody guess what it is in the chat? Anybody in the chat can guess what that mystery stock that I'm going to be buying, that I'm going to be, I think I'm going to kill it, right? I think I'm going to kill it. I think we're going to kill it. But Moo is my brokerage app that I'm going to be using to do all of this, right? So down in the description box, you'll see a link. First link in the description box, guys. Very important if you're going to position yourself to build wealth, right? Very important. Go down and click on that link. They're going to give you 15 free stocks. When you open your Moo brokerage account, you put $1,000 in that brokerage account. $1,000. They're going to give you 15 free stocks, publicly traded companies. If you put $100 in that new account, let's say you don't got 1,000, you put 100, they're going to give you 5 free stocks, publicly traded stocks, right? Anywhere from $2 a share all the way up to $2,000 a share. Who knows what you get? It's random, right? The key though is don't get hung up on that. I don't want people to get hung up. The free stocks are great, guys. Don't get me wrong. That's great. That's a plus. That's a bonus. That's nice. But really, you want to be geared up and ready to go for this stuff I'm finna talk about today, man. You really do not want to be messing around when it comes to this thing, because when this thing hits the ground, it's going to be going 150 miles an hour. And I'm telling you, you don't want to miss this. Because if you're on the sideline procrastinating, ain't got your brokerage account open, you ain't got no money put together, you haven't got rid of all this crazy stuff that you've been buying, you sell it all off and get ready and get liquid and be ready to go. Because I'm telling you, in my opinion, guys, this is whoever gets there first. I'm just telling you, whoever gets there first, really gonna be at the baseline. I'm gonna be at the baseline, because when this thing go to rising, I wanna be at the cheapest level I can be at, baseline. So I'm ready to go. I'm geared up and ready to go, and hopefully you are. But you gotta have a good brokerage app to be able to do that. And I think Moo for me has been a game changer. And I think for a lot of folks that have already signed up for the Moo brokerage app, you know, hey, it's a brokerage app. But you get me with the brokerage app, because I'm going to be using the brokerage app. So if you got questions and you can't figure it out, and don't get me wrong now, I'm not the expert. Moo is the expert. That's your first, you know what I'm saying? That's your line. That's your first customer service is where you go. I'm not Moo customer service. I mean, a lot of people think I am, but I'm not. I'm just a guy like you, well, I'm a guy, I'm a guy like you, and I mean that for men and women. When I say guys, I'm talking about men and women. I know I'm a little, but my point is, if I'm using the app, I'm doing the same thing you doing. You just got a camaraderie there. You just got to ease there. Now, if you use another brokerage app, that's okay too, guys. As long as you get to your pot of gold at the end of the rainbow, you use whatever you want to use. But if you're rocking with me and you want to rock with me, then get down to the description box and check out that Moo link. Open up your Moo account today, put $1,000 in there, get your 15 free stocks. That's a good start for somebody just jumping in this thing, guys. That's a wonderful opportunity to put 15 publicly traded companies in your portfolio as a baseline. And now you take that $1,000 and you get yourself ready to go to take care of this tremendous opportunity that's just getting ready that we won't talk about today. So you got your baseline, 15 free stocks, 5 free stocks, depending upon how much money you put in. And now you're ready to rock and roll. And you're going to send me an email and say, hey, Richard, I opened my Moomoo account. I put $1,000 in it. I put $100 in it. I put $5,000 in it. Whatever you put in it is on you. If you want the free stocks, you need to put 100 in up to 1,000. That's where you get the free stocks. If you got the 1,000, that's where I would go, guys, to get the full 15 free stocks. But then you're going to send me an email and say, hey, Richard, I opened the Moomoo account. And guess what I'm going to do? I'm going to turn around and send you some tutorial videos that I've already went and taken off of the Moomoo app. I've did my own, and I'm going to send them to you. Between those tutorials, it's going to tell you everything you need to know how to use the app, right? It's going to tell you the basic stuff you need to do to use the app. So that's the first thing I'm going to give you. I'm going to collapse time frames because you ain't going to have to run around and figure out how to use it. I'm going to send you direct tutorials on that's going to tell you. All you got to do is watch them and just have your little phone and be ready to go. It's going to tell you exactly what to do. How easy can that be? You ain't got to run around, oh, golly, I don't know how to use this broke note. I'm going to show you how to use it. All you got to do is send me the email. Go to my website, send me an email through my website, and just boom, I'm going to send you the information, period. And I'm going to send you my wealth transfer blueprint 1 and 2, 1.0, 2.0. I'm going to send you both of my blueprints so you know exactly what I'm buying. Now, you ain't got to copy that plan if you don't want to, but at least you'll know the guy you're listening to on YouTube, what he's doing. At least you'll know that. You can create your own plan because I'm not your financial advisor. I don't play a financial advisor on YouTube. I'm not a YouTube financial advisor, and I'm not a real financial advisor in real life. I'm just a regular guy who did what? Increased his confidence level and started executing. That's it. I'm just a guy who got real good at executing. I pulled back all the noise and just focused on what I was trying to get accomplished. Once you clear out all the noise, see, you got a lot of noise going on right now because your confidence level ain't up. You don't believe you know anything. You don't have no confidence, especially when it comes to your financial game. See, if you lack confidence in your financial way of thinking, guys, it keeps you on the sideline. It keeps you on the sideline. Once you get your financial confidence up and you start executing a few trades, you know how to use the app. You understand what you're trying to get accomplished by doing all of this. Once you get that confidence up, it's easy to execute. It's very hard to execute on something that you're not comfortable with. Y'all know that. It's very hard to execute, guys, on something that you're not comfortable with. So get down to that description box, sign up for that, basically click on the Moomoo link, open the thing up, put your $100 in there if that's all you can afford, put your $1,000 in there, which is your money that you're gonna then be ready to buy paper assets once you get your confidence level up. How are you gonna get your confidence level up? Because when you open it, you're gonna send me an email through my website and say, Richard, I've opened my Moomoo account. You said you were gonna send me some information to help me use it. I'm holding you to that. See, hold me to what I say I'm gonna do, guys. I'm okay with that. I'm okay with that, guys. I'm okay with being held to what I say I'm gonna do. Hold me to that. I ain't got no problem with that. I have no problem with that. So send me that email. I'm gonna send you that information and you're gonna be off and running. Well, all right, guys, let's dive on into this meat and potatoes because we got a lot to cover. I got 20 big boy brokerage companies on Wall Street have just did what? They've just increased their price targets on Nvidia. Listen, man, say what you want to say, but I'm going to tell you what I believe because my opinion on this channel is what I talk about, right? I'm not a convince you channel, so I'm not trying to convince you of anything, guys. I'm just telling you my opinion. When you look at Nvidia and what it has done, I don't see, personally, I don't see any way that I don't triple my net worth by buying this company over the next 4 to 5 years. I can't see that not happening. And again, I'm not trying to be an expert here. I'm just telling you my opinion. Your opinion may differ, and that's okay. It's okay for us to disagree. That's okay, guys. I'm okay if you disagree with me. But my opinion is there's no way that I don't triple my net worth by investing in this company over the next 5 years. You have 20 big boy, blue chip brokers, Wall Street brokers that have already increased their price targets. They've already increased their price targets. Let's talk about it. Why is that important? Because that's telling me the experts. I'm not an expert. I'm just a guy on YouTube. So I'm not an expert. But you got experts out there that are thinking the way I'm thinking. That makes me feel better. That gives me what? A level of confidence. That gives me a level of confidence as an investor to know the experts who do this all day long, 365 days a year. This is what they do. Analyze companies, break them down, build them back up, increasing their price targets on Nvidia. These are the experts, not me. I'm finna read you what the experts are saying. I'm not the expert. I'm just a guy on YouTube. I'm an expert at my own opinion. That's about all I'm an expert at. But I'm not an expert in Nvidia. I'm not an expert in Nvidia. I'm just a guy who goes and finds other experts. And if I can get 20, 30 of these other experts to say, hey man, we're increasing our price targets because we think this thing going to the moon. Who am I to disagree with them? Oh, I got more resources than them. I know more about the stock market than them. I know more about this company than them, and they're Wall Street companies, big boy Wall Street companies. I know more than them. Little old Richard Fain sitting here in his house on an iPhone 13 Pro making a live stream on YouTube. I know more than the 20 big boy Wall Street firms. And I'm sure with some of y'all in the chat think y'all do. Oh, golly, they don't know what they're talking about. I know more than them. You right here in a worse shape than me. I tell you, man, let's see what the experts say, okay? Now, whether you agree with it or do what you do, it's on you. I'm giving you the information. You can take the information and you can stuff it in the trash can if you want to, but I'm gonna give you the information. You decide what you wanna do with it. But I guarantee you, for me, Richard Fain, my pot of gold at the end of the rainbow, I'm gonna hitch my financial wagon to this thoroughbred. And here's why. Here we go. Here's the headline. More than 20 brokers just raised their share price targets for Nvidia stock. Not one, not two, not three, not four, not five, but 20. Okay, let's keep moving. Nvidia stocks on fire at the moment. Okay, let's stop right there for a second and let's go do a temperature check. Let's do a temperature check. Hang in there with me. Let's do a temperature check. Let's just do a temperature check. Okay, $1,123. That's where we're at today, this morning. That's where we're at right now. $1,123.86. What did it close at on Friday? $1,095. It closed at $1,095. Last week, it got itself all the way up to like 1,158 or something like that. Y'all do know this is the split week, right? Y'all do know this is the 10-to-1 split week, right? This is the split. This is the split week. This is the split week. So that's our temperature check. And throughout this live, we will go back and do a temperature check just to see where this thing is trading at. Right now, it's trading at $1,123 a share. This morning, it got out the gate. It was all the way up to 1,138. And it kind of settled a little bit. But let's see how it reacts throughout the rest of this live. So, temperature check. Nvidia stock is on fire at the moment. That's a plus. That is a yes. It is on fire. It is on fire. This year, it's up more than 100%. That's in 2024. That's year to date. The stock price is up 100%. What do you think? All right, let's go. Let's go. Can it keep climbing? A lot of Wall Street analysts seem to think so. After the company's recent Q1 results, more than 20 brokers increased their price targets for the chip designer. Phenomenal earnings. On May 22nd, after the US stock market closed, Nvidia posted its earnings for the first quarter ended April 28th, and the numbers were phenomenal. Phenomenal. Thanks to high demand for its artificial intelligence chips, revenue for the period came in at $26 billion, up a huge 262% from a year ago. Meanwhile, non-GAAP earnings per diluted share amounted to $6.12, up a staggering 461% year over year. Yeah, that's pretty good, right? I don't know. Help me out. I wasn't very good in math, but help me out with this. 461% year over year growth. Is that pretty good? Wow, that's crazy, man. It's worth noting that Nvidia also announced a 10-to-1 split. We're gonna talk about that. Hang around, because I got another company I'm gonna slide into as well. I'm gonna slide another company in here in a second. I'm just gonna slide it in. Y'all ain't heard me talk about this company. Nobody's heard me talk about this company, but I'm gonna slide it in here in a minute. So just bear with me. But let's stay on the big 900-pound gorilla for right now. Big 900-pound gorilla, silverback, right? Let's keep talking about it. It's worth noting that Nvidia also announced a 10-for-1 split, which will take place in June to make its shares more accessible to investors. Let's pause. Let's hit the pause button. Pause. Let's talk about that last sentence. Let's talk about that last sentence, guys, because that's important. Which will take place in June to make its shares more accessible to investors. Why would they do that? Why would they want their shares more accessible to investors? I'm gonna give you my thesis. Well, I don't know if it's gonna be right. Some of y'all gonna disagree, I'm sure, but that's okay. It's healthy for us to disagree, right? It's okay. I'm a big boy, I can take it. But here's my little 2 cents. See, I think Nvidia believes they're getting ready to go on this monster run. And guess what they're looking for? All the liquidity they can get. See, when you got a lot of liquidity, how do you increase liquidity, guys? Somebody in the chat, when you're a big company like that, how do you increase liquidity? You give away more ownership. That's how you increase liquidity, guys. You give away more ownership. How do you give away more ownership of a publicly traded company? You split the stock. See, Nvidia's getting ready to go on a run. Whether you like it or not, at least they believe they are. And guess what? I'm inclined to agree with them because, see, their CEO is worth about 90 bill with a B. 90 bill with a B. And guess what most of that 90 bill is tied up in? Nvidia stock. So do you think he got an incentive to make sure this thing work? I think so. I think he does. The guy's whole net worth is tied up in his company, guys. There is no diversification for him. It's either they succeed or he ain't a billionaire no more. So I think I'm inclined to roll with that guy because I think that guy got a burning desire in him, one, to win. And I love winners. I love winners. See, in this life for me, it's about winning and losing. I don't know about for you, but it's about winning and losing. This guy's a winner. And I want to win, especially in this financial game. I got to win in this financial game. And I got to hitch my wagon. I got to hitch my financial wagon to thoroughbreds. Nvidia is a thoroughbred because their CEO is a thoroughbred. I like thoroughbreds, especially them thoroughbreds that are triple crown type thoroughbreds. This guy in his company is. So what do? They said, well, okay, guys, we're getting ready to go on this monster run. Let's increase liquidity. Let's make sure we got so much cash on hand that we're going to obliterate anything that stands in our way. So what do? They offer a 10-to-1 split. Now, what do? They make their company more affordable to the masses. That's going to flood in on June 10th. You're going to see a flood of cash coming into this company. Why? Because the share price is going to go from $1,100 a share to $100. That's my little 2 cents. You may agree with it, you may not agree with it, but let me know when you put your YouTube video up so I can tell your side of the story. Go put your YouTube video up. Send me an email when you put your YouTube video up and let me hear your side of the story. I don't want to hear it in the comment section. I want to hear it in your YouTube video. That way I can see you. I can know who you are, right? So let's keep moving. It's worth noting that Nvidia also announced a 10-to-1 split, which will take place in June to make the shares more accessible to investors. Basically a liquidity event. It's a liquidity event. So they lessen the stock price to encourage more investors to come in, which creates more liquidity for them, which is nice because they're getting ready to go on this monster run. All right, here we go. Let's keep moving. In the past, tech stocks that have done these kinds of splits have generally performed well. Generally. No guarantees. There's no guarantee. But generally, when they've done these type of splits, they've done well. Okay, here we go. Price targets, increases. Now, on the back of these superb results, many analysts have raised their share price targets for the stock. These brokers on the 23rd of May, these brokers raised their targets. So you got Webb Bush, old price target was $1,000. They raised theirs to $1,200. Citibank, $1,030. They raised theirs to $1,260. Wells Fargo, big boy blue chip. They went from $1,150 to $1,250 a share. Cantor Fitzgerald, they went from old price of $1,200 a share to $1,400 a share. UBS, big boy, $1,150 to $1,200, benchmark $1,000 to $1,350. They raised theirs up by $350 a share after the earnings came out. Another big boy, Morgan Stanley, $1,000 before, now Morgan Stanley is saying $1,160. They done already hit the $1,160 last week, I think. I think they hit $1,160 last week. We may hit that today. We may hit $1,160 today. Who knows? We may go to $1,200 today. Sometime this week, we may go to $1,200. Who knows? Who knows? Big boy stuff. Jeffries, $1,200, old target price. New target price is $1,350. Argus, old target price $950, all the way up to $1,100. Let's see if we got any big ones in here. And then so on and so forth. Let me point out a couple big boys though. A couple more big boys. Deutsche Bank, $850 old price, new price $1,000. JP Morgan Chase, old price $850, new price $1,150. Already beat that. We already got the $1,150. That's in the rearview mirror. So JP was a little light. They took the safe route. They didn't get aggressive. They took the safe route. That 1150 is already in the rearview mirror. We already did that. Did that, done that, going on to bigger and better things. So anybody, oh, I don't never do that, it already done it. Sorry. For all y'all in there talking about, it'll never go to 1100. It's at 1100 right now. It's 1126. Done. 1150, done. Done. Rear view mirror, baby. Rear view mirror. Goldman Sachs. Big boy. 1100 previous, new price 12. Bank of America. 1100, 1320 new price. Whew. Big boys getting aggressive out here in these streets. In total, there are 24 increases here. JP Morgan has the highest price target at 1400. There we go. Is Nvidia worth buying today? Do these new analyst targets, most of which are above the current share price, mean the stock is a buy today? Well, I think the answer to that depends on a few factors, including an investment horizon. See, that's why I keep telling y'all guys, if y'all don't get in this thing, and I know some people out here believe they day traders and they think they can, fine. You want to go day trade and sell the stock every day, do whatever you want to do. That's not what I do, so I ain't talking to you. I'm talking to these people that are trying to use this thing to really build some real wealth. I'm not talking about somebody trying to get in here and make them $1,000 and hooray, I made $1,000. If that's what you want to do, fine, do it. I'm trying to talk to people who are really trying to change something in their financial life. That's the people I'm talking to, because listen, man, you can, but you got to have a long-term horizon, in my opinion. And I say long-term, I'm talking about at least 36 months, at least 120 months. So anywhere between 3 years and 10 years, I think will give this stock the time it needs to start really, well, put it this way. The stock is just the stock. It's really the company. I think 3 to 10 years will give this company the time it needs, and the AI industry at the time it needs to really explode. So I think in 3 to 10 years, if you can stay in it that long and consistently buy, that's not just Nvidia, but I'm talking about the S&P, FTEC, information technology, the Mag 7. If you can consistently buy these things over the next 3 to 10 years, for me personally, guys, I think it's a win. And that's basically what this guy is saying. Well, I think the answer to that depends on a few factors, including an investment horizon. All he's talking about there is how long can you stay in the investment? You get in today, how long can you stay in? That makes a difference. Risk tolerance makes a difference because the stock market goes up and down. Nvidia stock is going to go up and down in that time period. That's where your risk tolerance has to be right, guys. You can't be this super ultra conservative investor and then you think you're going to just get all in this thing and everything is going to be peaches and cream. You're going to get shocked. So if you're super ultra conservative, I don't want no fluctuations in my principal, this is probably not the right play for you. You probably need to stay over there in CDs at the bank or in your money market. That's probably where you need to be. You probably need to get in your U.S. Treasury bond. You don't need to be over here. You got to have some thick skin and you got to have some confidence and you got to know what direction you're going in if you're coming over here. Because there is some volatility that awaits us. But I'm okay with that. So I've been through this volatility thing for 30 years because I've been 100% equities for 30 years. 100% equities. So I know about this volatility thing. But I also know this. There ain't no volatility that's long enough to shut down the stock market for 10 straight years in a row. It hasn't. Never happened in the history of the stock market. There's never been a 10-year period of time when the stock market as a block, a 10-year block, where it's traded at a negative. Never. So investment horizon, risk tolerance are things you got to think about, guys, before you get into this thing. And then your existing position size. You got to think about how much you want to buy. Y'all already know, I already told y'all, and I'm going to keep telling you, do not put all your eggs into one basket. That's what they're talking about. You better have the right amount in this basket. This is one basket. It should not be your only basket, guys. I'm telling you this from 30 years worth of experience. You do not want this to be your only basket. right? Don't get me wrong now, it's an incredible, incredible company, but I cannot have my entire net worth tied up in one company. Anything could happen. CEO could get ran over by a bus. Anything can happen. People can start saying, oh, we don't like AI no more. Forget AI. Right? So you do not want all your eggs in one basket. My basket is going to consist of, like it always consisted of, 50, 30, 20. I got 3 baskets. Matter of fact, I got 4 baskets. 50, 30, 20, and then Nvidia. That's a 4th basket. But my biggest basket is my S&P 500 ETFs that I buy. That's my biggest basket. Why? Because that's where my equities are that are diversified across every industry, every sector. That's the big basket. And then my tech basket. But how do I diversify myself in my tech basket? Because I got 325 different tech companies in the basket. Still tech, but you got 325 different companies that do different things at different stages in their growth, right? So I diversify myself 30% in my tech basket by having 325 tech companies in the basket. I got 500 companies in my S&P 500 basket. Every industry, every sector. Big boys, value companies, big boy growth companies, all in the same basket. So I'm diversified, all equities, but diversified. And then, of course, I got my 20% basket, which is the Magnificent 7. Top 7 companies in the S&P 500, all tech companies, all big boys, all value, very, very high market caps, right? Top 15 companies in the world from a market cap standpoint. And then I got Nvidia. And then I'm going to be adding one more today, which I'll tell y'all about here in a second. So I'll be adding one more. So not only I got my 50, 30, 20, and then I got these 2 over here, Nvidia and this other company. They own it by themselves. But if both of these go to 0, I still got all of this over here that I'm going to be okay with, because this is where 80% of my money is over here in these 3 baskets. 20% is going to be in the Nvidia basket in the new company that I'm going to be mentioning today. That's it, right? Oh, Richard, that's 100% equities. What are you doing? That's 100% equities. Yeah, I want growth. I don't care about the income right now. I make enough money right now to take care of me and do all the things I want to do, plenty of it. What I'm looking for is to triple the net worth. So when I don't have these income streams over here anymore, or when I'm in the golden years, I got to triple the net worth. I'll turn that income stream on, and that'll take care of me for the rest of my life. And then I'll pass that on to my kids. See, that's how it works. At least in my world I live in. Your world might work a little different. But my world, that's the way it works. So let's keep moving. Let's keep moving. So the 3 things you have to pay attention to, guys, if you don't hear me anything else, I know I'm having a little fun with you, and I like to enjoy myself when I'm having these live streams because I really enjoy them. And I like to do the way I do it because I enjoy this way. You go make your YouTube videos and your live streams the way you want them. I don't need no feedback on how to do my live streams. I appreciate it, but I don't need it. I'm going to do them the way I want to do them. You don't like it, find you another YouTube channel. So here are the 3 things you got to think about. Just like this gentleman is saying here. You got to think about these 3 things. You got to think about investment horizon, risk tolerance, and existing position size. And I just walked you through what those things are, right? Investment horizon is, okay, Richard, I'm willing to get in this thing for 5 years. That's your investment horizon, 5 years. My investment horizon is 10 years. I'm going to stay in this thing for 10 years. So I got 10 years to be able to ride any ups and downs in the market for 10 years. I'm okay with that. Risk tolerance. I consider myself a moderate investor. I don't consider myself an aggressive investor. I don't consider myself a conservative investor. I'm like right in the middle. I like taking calculated risk. I'm not one of these guys that's going to say, well, golly, this company is getting ready to IPO. I'm putting everything in the, no, I ain't that kind. That's aggressive. That's not me. I'm more of a, give me the big boy, blue chip, proven, historically track record, multiplying money winners. Number 1 in their industry, winners. Triple crown winners, winners. That's the kind of investor I am. All equities, so that keeps me more moderate, but I'm only investing in proven big boy blue chip companies. I don't want no IPOs. I don't want no small little public companies that you think gonna be great. I don't want any of that. That's too aggressive for me. If I'm gonna put my money into equities, into companies, they're gonna be the very best companies in every industry that they're in. They're gonna be the best. That's why I'm moderate, right? So I'm not conservative because I'm not, oh golly, I don't wanna lose anything. I'm gonna keep it in the CDs. I'm gonna keep it in the money market. I can't do this. I can't get up in the morning and my stock goes down $5 a share. I'm gonna panic. That's conservative, in my opinion. Y'all might disagree, but I'm giving you my opinion. Moderate is like me. Big boy, blue chip, proven, everything got to be on point. That's moderate. And then aggressive is, hey man, I'm hitting a home run. I'm a home run hitter. Either I'm gonna hit a home run or I'm gonna strike out. That's aggressive to me. I'm not a home run hitter. I'm a single, double, and occasional triple. That's why I'm in the middle. Over here, if you're conservative, all you do is bunt. You don't even hit, you just bunt. All you want to do is bunt and get on base. You ain't trying to hit no home runs. You ain't trying to hit no doubles. You ain't trying to hit no triples. You just trying to bunt. I'm gonna bunt and get on first base, and that's it. That's conservative. I'm in the middle. Give me some singles, give me some doubles. Let me hit an occasional triple. I'm gonna stay in the league 20 years and I'm gonna make $1 gazillion. Over here, aggressive, all I do is hit home runs. I strike out and hit home runs. I ain't that guy. It's too nerve-wracking. So, okay, let's keep moving. So you know the 3 things you gotta ask yourself, guys, before you invest in anything, right? I just gave them to you, so remember that. Just remember that. Remember those 3 things, right? Time horizon is very important. Risk tolerance and position, right? Never put all your eggs in one basket, guys. Please don't. I know. Listen, I'm not an expert. You do whatever you want to do. Hey man, my job here is just give you my opinion. You don't have to follow it. I'm not twisting anybody's arm to follow nothing. I'm not up here trying to be a YouTube financial advisor. I don't play one on YouTube. I'm not one in real life. I'm just a guy giving you my opinion. You do whatever you feel like you want to do. You want to dump all your money in Nvidia and swing for the fence? Go ahead, but get ready for the consequences, right? Because if you don't hit that home run and you strike out, you go to zero. So just remember that. So here we go. For me, this is what the guy who did the article is saying, yeah. For me, Nvidia is already a massive holding after its recent surge. So I already got a lot of Nvidia in this thing, right? Now, I didn't. Don't get me wrong. Now, right now, I'm in a position where right now I got about 265 shares of Nvidia. And I bought it at $950 a share. This is the second time around, right? So my second time around buying it, I bought it again. I'm at $950 a share. I got 265 shares right now. So is that heavy? It depends on how you look at heavy, guys. Your heavy may not be the same for me, my heavy, right? It just depends. It's all relative, right? It's based on what you think, not what I think, right? It ain't heavy for me, but it might be heavy for you. It ain't heavy for me. According to this gentleman, however, if I didn't own the stock, let's go back. For me, Nvidia is already a massive holding after its recent surge. Currently, it's my 4th largest individual stock holding. So right now, I don't need to buy any more shares. That's not me talking. That's the gentleman who wrote the investment guy who wrote the article, right? So he's saying when he looks at his individual stocks, it's the 4th largest holding. For me, it ain't my 1st largest holding. My ETFs, my S&P 500 basket, my information technology ETF basket are larger than my holdings in Nvidia. It's larger. So I don't have that problem. The question is, how much more do I want to buy? Do I want to, and I did a video yesterday, I believe it was yesterday, where I decided I was going to sell my position before Friday or whenever, Thursday or whenever it is. I don't know. Whenever the last day is, I may sell my position. So I'm waiting. I'm waiting. I may sell that position, bank the profits inside of the retirement account so I don't get no taxes on it right now. Down the road, I'll get some taxes, but not right now. So I may sell what I got right now, bank the profits, because I'm in at $9.50 a share right now. If it gets to $11.50 today, I may bank it. I may get out of it, put the cash back in the account, and then re-enter on June 10th when the floodgates open for retail investors. My plan is already have my position ready to go to buy as soon as the market opens, boom, and just ride that wave, and that'll be my next venture with Nvidia. And how does that work for me? I'm gonna sell my position right now. Like I said, I got the 265 shares. I'm gonna sell them. If it gets to $11.50 today, I'm selling them. I'm gonna sell them at $11.50, make a $200 per share profit in the retirement account, slide that money back to the retirement account, and then on the 10th, which is next Monday, a week from today, I'm back on it, heavy. And I'm gonna stay on it heavy for the next at least 5 years. That's the strategy, right? So we'll see how that works out for me. What's your strategy? What's your strategy in all of this? And you should have one. You should have one. Now that I've given you these three things that you need to walk through these three gates, right? You need to walk through these three gates: time horizon, risk tolerance, position. You need to walk through those three gates, guys. As you walk through these three gates, what are you trying to get accomplished? See, a lot of us are investing and we have no idea what we're trying to get accomplished. And guys, that's not healthy. That's not healthy financially for you. You should know what you're trying to get accomplished. See, you should not be looking to somebody else, including me, to tell you what you should be expecting. You should not be looking to no one else and asking them, what should I be expecting? How much should I put in? How many should I buy? Why would you be asking anybody else that? It's your financial freedom. What's going to happen is somebody going to tell you what their expectation is. And guess what? If it don't match up with your expectation, you're going to be then looking like, I knew I should have trusted these people. Stop looking to other people to tell you what you need to do. It's one thing if you say, hey, Richard, listen, man, I think this thing is a home run. I'm going to get into it. It's not going to be I'm not going to put all my eggs in one basket, but hey, man, I got 15 grand that I can play with. My investment horizon is 5 years. So I'm okay with the ups and downs. I'm going to stay in this thing 5 years. That's my investment horizon. My risk tolerance is okay. I'm like you. I'm right in the middle. Long as it's big boy blue chip, proven historically, I'm okay with that. So my investment horizon is moderate. I'm okay. Long as it's big boy, got a track record, I'm okay with it. And then as it relates to my portfolio position on this one stock, it's about 10%. I got 90% in something else. I got 80% in something else. I got 75% in something else. But I can't miss this opportunity. What do you think? And I'm gonna say, hey man, go get it. Because you done thought through the process. You didn't call me, you didn't email me and say, Richard, tell me how many I should buy. No, guys, don't put that on me. Do not put that on me. Because when something go wrong, guess who you're gonna point at? Me. You know how we are. Come on. Y'all know I ain't lying. Y'all know how we do. Oh yeah, that guy Richard Fain on YouTube told me to do it. I emailed him. He told me to buy 1,000 shares. Why did I listen to him? Y'all know how we are. Come on now. Let's keep it 100. That's exactly what people do. Don't be emailing me, asking me how much you should buy. You should know what you're trying to get accomplished. Right? Come on. You should know what you're trying to get accomplished in this stock. You should know, right? You should. So make sure you go through those three gates before you put any money in anything. Pass that through these three gates, right? Time horizon. How long do I want to be in this stock or this ETF? What's my real risk tolerance here? Am I conservative where I don't want no fluctuation in my principal? Guys, if that's your position, that's okay, but you need to keep your money at the bank, in a CD, in a money market that's FDIC insured, or lock it into a 10-year treasury, 5-year treasury, 2-year treasury, where you got a guarantee by the United States government. That's where you need to be. You don't need to be in this. You don't need to be in this if you don't want your principal to fluctuate from time to time. Don't get in this. Please don't. Don't do it. Keep your money over there at the bank. All right? That's what I would do. If you're medium, moderate, you do got some risk, you're willing to take a little bit more risk because you want that upside reward, then take a look at it. Now, if you're aggressive, of course you're going to take a look at it because you used to swinging for the fences. You used to striking out or hitting home runs. So aggressive people who invest in the market, they're used to this. This is nothing for them because this is the way they lead their life. This is the way their investment life goes. They understand the risks associated with this type of play. So just know the risks associated with it and where you fall within those risks and have reasonable expectations. I think it's going to take this thing 3 to 5 years to get where we needed to get, at least for me to get where I needed to get to. It's going to take at least 3 to 5 years. When these split like this, guys, they don't just run back up to 1,000 in 2 days. It takes a while. But I'm okay with that. I'm in the stock 5 years, man. I'm good. I'm okay with that. Even if I got to stay in the stock 10 years, I'm okay with it, right? When do I sell? When do I get out of it if it's just not going right? Well, I get out of it when it shows me that's why I like companies, see. When you're talking about crypto, there are no companies, right? So it's hard to evaluate the thing. It's just what somebody else would pay for it, right? But with companies, you can evaluate it. You can look at the earnings reports. So let's say Nvidia comes in second quarter, third quarter, they missed expectations. Fourth quarter, they missed expectations. At that point, the stock price is going to start taking a hit anyways. At that point, if I don't believe in the stock anymore, maybe I exit, cut my losses, and I move on to something else. You ain't got to just stay there and watch the dang on thing fall down to the below the earth floor. You got to watch it. Look at the earnings report. Forget what the stock is doing. Look at the earnings reports. When they come out with these earnings, which they will come out with every quarter, guys, all you got to do is pay attention. If they're missing expectations, they're not hitting their numbers, do what you got to do. I don't believe this will happen with this company, but it could, guys. Anything's possible, right? So just remember that. So let's keep moving. Let's wrap this up so we can get on to this other thing I want to talk to you about. However, if I didn't own the stock, now see, he's saying I own the stock. It's already in my portfolio. It's the 4th largest position that I have, so I'm not buying anymore. That's what this expert is saying, right? Because he already owns it. But here's what he also said. However, if I didn't own the stock, I might consider having a nibble at current prices. That's today's prices. He might take a nibble at it. And that's again, guys, oh, should I buy now or should I buy later? Again, pass through those 3 gates. Got to pass it through those 3 gates. For me, in my financial situation, since I'm going to be in the stock long term, I'd rather take my $200 a share right now, exit, and then get back in this thing because I know it's going to take me 5 years to get where we need to get to. I'd rather take my profit off of that first investment now and then get back in it and then get the second part of the pie later on. I don't want to roll it all through. I'd rather take it now and then start fresh. That's my philosophy. Don't have to be yours. You can buy today and just ride through the 10-to-1 split and keep riding if you want to. But you got to figure out what's right for you. You can't, there is nobody that can tell you what's right for you other than you. You got to tell what's right for you. You should know what you're trying to get accomplished, right? So let's go. However, if I did not own the stock, I might consider having a nibble at current prices just to get some exposure to it, given its dominant market position in the AI chip space. Number 1 in the AI chip space. Number 1, 900-pound gorilla, right? I'd want the stock in my portfolio And at present, it's not actually that expensive given the level of growth. That's what I keep trying to tell y'all guys. When you, with this level of, you're talking about a per share stock price that went up by 460 something percent in 1 year. You're talking about revenues that went up over 240, 50%. Guys, you got companies out there that don't even have this type of profitability that are doing $2,000 a share, $3,000 a share. That's what I'm trying to tell y'all, man. This thing is, I still think people don't believe the AI thing is real. That's why I don't think it's going to the moon like it's supposed to. But I'm telling you guys, it's real in my opinion, and I think eventually it will go to the moon. That's just my opinion. Y'all might think differently, but I'm with this guy here. At its present, it's not actually that expensive given the level of growth. The forward-looking PE ratio using next year's earnings forecast is only 32. However, I wouldn't want to go all in on it. See? Get you a little slice of the pie, guys. You ain't got to eat the whole, you ain't got to try to get the whole pie. Just get you one slice of it. Keep a consistent, diversified portfolio. I choose the 50-30-20 method. All equities, but diversified within my equities. Don't try to go for the whole pie on this thing, man. Unless you really know what you're doing. If you're brand spanking new and you don't know what you're doing, get a little piece of pie, man. You can always come back and nibble at a little bit more down the road if you want to and ride the thing down the road. But don't on June 10th, don't try to get the whole pie. Just be careful, man. This guy is not lying here. He's telling the truth. Be careful. However, I wouldn't go all in on it, especially after its huge gain in 24. One thing to understand about Nvidia is that it can be very volatile. I'm experiencing that right now last week. Saw that volatility last week. It goes up one part of the day, it's 11.58. By the close of business, it's 10.95. So I'm telling you, man, I've been doing this for 30 years, and boy, I'm telling you, I had to double take a couple times and compose myself and take my emotional thinking cap off and put back on the logical thinking cap, because for a couple minutes there, I was like, what the hell is going on? What's going on? And I've been doing this for 30 years, man. So I'm telling you guys, it's volatile. So you got to have the right expectations and the right time frame for this thing. This guy's right on the money, man. This guy's right on the money. One thing to understand about Nvidia that it can be very volatile. The stock that can fall 20% or in a blink of an eye go up 30%. He ain't lying, dog. I'm telling you, the guy's telling the truth. But you know something, though. If you're positioned right, you know your risk tolerance, you know your time horizon, you ride through all of that. But if you ain't got any of those things figured out, you're going to panic. Your emotions going to take over, and you're going to panic, and it's not going to be a good ride for you. It's not. So please, before you get into this thing, if you decide to get into it or anything else out there, make sure you pass through those 3 gates, right? Make sure you answer those 3 questions. Make sure you know why you're buying this thing and what you're trying to get accomplished. And you understand that it's volatile. 20% decrease one day, 30% increase the next. It's volatile. So know that. Doesn't mean it's not a great company, because it is, but it's volatile. Just like the stock market in general, right? So the stock can fall 20 or it can increase 30 in the blink of an eye. I've witnessed this firsthand as an owner. If bond yields were to rise in the months ahead, or a competitor launched a powerful new AI chip, we could be looking at that kind of fall. So you got to look at the bond market. I keep telling y'all guys, you see this bond market every day. And if it's going up and it's green, you know what's happening in the stock market. It's going down in most cases, right? You also got to follow a little bit along, just kind of figure out what's going on in the chip, the AI chip industry. Yeah, there's some competitors out there, but they ain't close to Nvidia. But you got to keep your eye out for competitors. You got to keep your eye out for people grabbing market share. Because one thing I can tell you, just like these 20 big boy brokerage companies, increase, they will turn around and decrease just as fast. So just be careful, right? I'm not trying to dissuade you. I'm not trying to scare you. I'm just trying to tell you to have a real compelling reason for why you're doing this. And understand there will be volatility. But at the end of the day, I still believe this company helps me triple my net worth, and I'm in. I understand the risk. I'm prepared for the volatility. That's why I'm not putting all my eggs in one basket. That's why I'm taking some profits now, right? To hedge. See, I'm hedging. I don't know about nobody else. I'm taking my profits now as a hedge against the future. I'm going to take mine now. Listen, bird in the hand, better than two in the bush. I'm taking my bird right now. It get to 11:20, I'm exiting, period. And then I'm back in on June 10th. So here we go. Here we go. Last little piece of this, and then we're going to wrap it up. Given the volatility, drip feeding money into this stock over time is the best way to play it, in my view. That's what I've always done in the past, and it paid off. Exactly. So what's my plan? What's Wealth Transfer Blueprint 2.0? It is exactly what this guy said. Drip. So what I'm going to be taking is $5,000 every month, dollar cost averaging into this stock every month for the next 5 years. That's the drip I'm going to be using. Your drip might be different, might be higher dollar amount, might be lower dollar amount, but I do not recommend you taking every dime. Oh, I got 50 grand and I'm all in day one. That's not the recommendation that I would recommend, but it's your money. You do whatever you feel like you need to do, right? It's your money. My personal strategy is going to be $5,000 a month. That's going to be my personal strategy. And I'm just going to drip into this thing, just like this gentleman mentioned here. So there you go, man. You got your top, you got 20 big boy brokers, including the top 4 banks in America, Wells, Citi, JP, and B of A, all giving it a thumbs up, right? Then you got other big boys like UBS and some other little boys, big boys, giving it a thumbs up. So I think it's a go. Let's do a temperature check. Let's do a temperature check. $1,137 a share. The last temperature check, we were $1,123 a share. We're getting close. It hit 150. It hit 1150. I'm out. So I'm watching it. I'm out. 1150. I'm out of here. So, and I'll see you on June 10th. We'll do another temperature check before we get out of here, but let's move on, because I got one more thing to cover here. Again, guys, if you're interested in getting yourself 15 free stocks, get down in the description box, click on that Moomoo link, open up your Moomoo account. They're going to give you 15 free stocks when you put $1,000 in your brokerage account. You got to do that right away, guys. You can't be like, oh, I opened an account in June, Richard, but I didn't put my $1,000 in until July. Well, you ain't going to get no 15 free stocks, period. You got to put it in when you open the account. The whole point of opening the account is to use it, not open it and let it be dormant for 30 days and then you want to use it. No. Open the account, put your $1,000 in right away, be ready to go, get your 15 free stocks. For those of you that don't have $1,000, you can put $100 in. You can put $100 in and they'll give you 5 free stocks. Great offer, man. Moomoo is the brokerage app that I'm using over the next 10 years to triple my net worth. It's the brokerage app I'm going to be using to buy Nvidia. $5,000 a month, killing it. That's my drip. You got to come up with your own drip. My drip over the next 5 years is $5,000 a month. That's my drip. I'm just going to drip every month for the next 5 years, and I believe it's going to be amazing. So get down in the description box, click on that Moomoo link, and get yourself started today. Don't delay. Get started today. June 10th is 1 week from today, guys. So if you ain't got your stuff together, money in the brokerage account, I don't want to hear nobody emailing me, oh, they got a 5-day hold on my money. They got a 3-day hold, and I missed the split. I missed June 10. They ain't got... That's why I'm telling you today, dude, don't be delaying, man. Get your butt down in the description box, Get the thing on account, get it online, get your money in there so you're ready to go June 10th. Because I don't want nobody emailing me about Moo holding their money. Oh, golly, my deposit ain't hit yet. I put it in 2 days ago. That's why I'm telling you to do it now. You ain't got to worry about all that. You're going to be ready to go on Monday, June 10th. But if you wait till Friday, you stuck like Chuck because it ain't going to be available. Let's go. All right. I told y'all I was going to give y'all the name of this other company that I think I'm going to start buying. Here's the headline. Nvidia versus Chipotle. That's right. Chipotle. Guys, they're getting ready to do a 50-to-1 split on, I believe, June 18th. Chipotle, 50-to-1 split, I believe, on June 18th. Now, currently, the stock price is like $3,000. You know I ain't finna get in under that. That's a no. That is no way I'm buying that for no $3,000. Absolutely not. These guys make fast food. Don't get me wrong, I like Chipotle. I go there, but I ain't finna get in at no $3,000 a share. I can promise you that. So I'll wait till June 18th or whenever it is. When it split 50-to-1, I'm in like Flynn. I'm in like Flynn, baby. I'm in like Flint because I think out of the fast casual, healthy, quote unquote, organic, fresh, quote unquote, we don't freeze anything, quote unquote, everything is in-house, quote unquote, they're probably the best. I don't really deal with food companies like that, and y'all know I don't rock with food companies like that, no fast food companies, I don't really rock with them. But for some reason, Chipotle has figured a way to defy gravity. And I'm thinking if that thing goes 50-to-1, it's worth me throwing $1,000 a month into it to see where it goes, right? It's worth it. So Nvidia versus Chipotle, which could be the better stock, split stock to buy now and hold for the next 10 years? See what I'm saying, guys? I try to bring y'all information that's consistent with my investment horizon, 10 years, right? Which would be the best one over the next 10 years? Let's take a look. Let's take a look. This is coming from Motley Fool, which is a group out there that they do invest in and all that other stuff. This ain't no commercial for them, so I'm just telling you where the article came from. Here we go. Two of the most sizzling stocks so far in 2024 are Chipotle, Mexican Grill, and Nvidia. Two different companies in two different industries, but I like it, right? I like it. So here we go. Indeed, both businesses are considered leaders in their respective industries, and that's true. Got to give it to them. If you're talking about fast casual, you don't get no better than Chipotle. If you're talking about fast casual, you just don't get no better. You don't get no better than Chipotle. If you're talking about AI, artificial intelligence, building infrastructures, you don't get no better than Nvidia. Just don't get no better, right? However, in addition to solid business performance, these two companies share something else in common that is fueling some heightened buying activity. Specifically, both Nvidia and Chipotle have upcoming stock splits scheduled for June. So I'm trying to tell you, man, get that Moo account open, get yourself ready, get yourself in position to be executing. Down in the description box, first link. All right, let's move. With shares of each continuing to soar, investors may be hard-pressed as to which company represents a more compelling position in the long run. I'm going with both of them. But I'm going to read this article anyway and give you my, I'm going with both. I'm giving you mine right now. Both. I ain't going to pick one. I'm going to take both. Let's break down the benefits and the opportunity costs for owning each stock and assess which one looks like the superior choice. Before I go any further, for the record, I'm going to vote for Nvidia. Y'all vote for who y'all want to in the comments right now as I go through this thing, but I'm saying Nvidia. Y'all can, let's see, do a little poll right here. Run through there real quick. Show me who you think. Who's the better stock 10 years from now? Before we get down to their little pick, who y'all think? Who's the better stock 10 years from now? Nvidia or Chipotle? I'm buying both. But which one? And I like both because they're a hedge against each other. One's in the food industry, one's in the AI Which one y'all think will be better in 10 years? Which one will perform the best? I know we're forward thinking. We're kind of predictions, but that's okay. It's okay to give a prediction. Give your prediction. Which one will be the best? Which one will be the best in 10 years, Nvidia or Chipotle? Let's take a look what they think. The case for and against Nvidia. They're going to take Nvidia first. Let's see what Motley Fool thinks about Nvidia first. The chart below illustrates Nvidia's revenue, gross profit, and net income over the last 10 years. Clearly, the last couple of years have witnessed outsized growth compared to prior periods. It's no secret that Nvidia is a major player in the artificial intelligence realm. The company's H100, A100, and Blackwell graphics processing units are in high demand with customers like Tesla and Meta. Big boys. Got a couple big boys. Matter of fact, they got about 5 big boys. But we ain't gonna go in all of that. We're gonna stick to the script. We ain't gonna go in all that. I ain't gonna go down a rabbit hole right now. What's really notable about the trends above is that Nvidia's growth is accelerating across both the top and bottom lines. Do y'all know what that means? Who can tell me what the top and bottom lines mean in the chat? What are they talking about there? The top and the bottom lines. What are they talking about? What do they talk about? They're excelling in both. So top line revenue and profits, correct? Top line revenue and bottom line is profits, right? They're excelling in both, right? Let's keep going. What's really notable about the trends, What's really notable about the trends above is that Nvidia's growth is accelerating across both the top and bottom lines, generating excess cash flow. Nvidia is able to reinvest profits into other growth drivers and bolster its long-term roadmap. Now, remember we talked about early on in the first clip, the first part of the discussion. Remember I talked about why they're doing that 10-to-1 split? And I gave you my opinion, and it's still my opinion. They're trying to create liquidity. When is the best time to create liquidity, guys? Anybody in the chat? When is the best time for a company to create liquidity? When they just came off a killer quarter. When they're riding that cash flow hog, that's the best time for them to create liquidity, right? Because everybody wants a piece of them. So that's what these guys are doing. Smart move, because they're trying to bank cash so they can go on this next leg of this run. See, they want to go from a tier 5 company to a tier 10 company. A tier 10 company is like Microsoft. That's a tier 10. Apple. That's a tier 10. Right now, Nvidia is about a tier 5. They're trying to get to Microsoft levels when you're doing over $500 million in revenue. That's what they're trying to do. They're trying to get to tier 10. So what are they getting? They're creating liquidity through a 10-to-1 split of the stock. They're allowing more people to become owners in exchange for what? An investment in the company. Right? All right, here we go. Let's keep moving. Nvidia is able to reinvest profits into other growth drivers and bolster its long-term roadmap. While this is all positive, there are some risks that should be acknowledged for now. Nvidia is estimated to have an 80% share of the AI chip market. However, rising competition from Intel, advanced micro devices, and even big tech firms such as Amazon and existing customers like Meta pose a threat. Each of these companies has developed its own line of chips, which should eventually encroach on Nvidia's commanding lead. Now, here's my disagreement on that. Nvidia has gotten smart. So Nvidia has created a software training program to go along with the hardware, which is the GPUs. So they've created a software program that you have to have in order to learn how to operate the GPUs. So they ain't dumb now. That changes the game for them. So not only are they selling you the hardware, But in order to use their hardware, guess what? You got to purchase the software. I'm trying to tell you, man, these guys ain't stupid. So, yeah, great and y'all know I've always said, competition is healthy, man. I love competition. When I was in banking, I loved competition with me and the other lenders. Loved it. When I played football at the University of Florida, came in as a freshman, I loved the competition. When I went to the NFL for my 3 years, loved the competition. Right now, on YouTube, I love the competition. That's healthy if you use it right. That's healthy. It's healthy for growth, right? If you use it right. So I don't think Nvidia is worried about the competition piece, if you ask me. The case for and against Chipotle. Here we go. Chipotle is best known for its tasty burrito wraps and bowls. With 40 million reward members, Chipotle has undoubtedly built a loyal customer following with strong brand equity. One of the ways that Chipotle has been able to capture the attention of so many consumers is due to the company's investments in digital sales strategies. Similar to Nvidia, Chipotle has been able to fund an extremely profitable operation. Its digital sales channels have helped fuel meaningful margin expansion, which in turn has flowed to the bottom line. Although these financial results are encouraging, Chipotle's stock does carry some risk. You ever been in a Chipotle and you see all these people coming in there picking up stuff on the racks over there? So I ain't never used their little online stuff. I normally just go in there. Let me tell you something, man. You have more people coming in there picking stuff up that rack that they didn't order online than they do coming in there to eat. I think it's crazy. They got their own little line over there to make food for the people that's coming in that didn't order online. I just ain't never seen that before. That's crazy to me. But that's what they're talking about. They're taking advantage of that digital customer. That fast. Why? The digital customer is more expensive than the walk-in customer, guys. See, when you got a lot of walk-in customers, you got to have a certain footprint. You got to have a certain brick and mortar footprint. If you can downsize that footprint and have just the walk-in, come on, man. Y'all know the rest. Not a bad strategy, though. Not a bad strategy. Not a bad strategy. Microeconomic factors such as inflation and interest rates can impact just about any business. While Nvidia is certainly not immune to these factors, I would agree that a restaurant chain such as Chipotle is more susceptible, which is true, right? Because Nvidia is not selling to you and me. We're not Nvidia's customer. You and me are Chipotle's customer. So the consumer, inflation affects us. Chipotle want to charge $10 for one of their bowls and I'm struggling. Guess what? I'm going to cut Chipotle out. Right? So I get it. Chipotle is more consumer facing. Nvidia is not consumer facing. They're business to business. Right? They're business to business. Chipotle is customer to business. I mean, customer to customer or business to customer. Business to customer. Right? So a little bit of difference. So inflation might affect Chipotle a little differently, which I agree with. Consumer discretionary trends are highly sensitive. That's what Chipotle falls in, right? Consumer discretionary. Consumer discretionary trends are highly sensitive and can fluctuate from year to year. I'd encourage investors to think about that dynamic as it relates to long-term growth prospects. And the winner is. Who going with who? Who going with Nvidia? Who going with Chipotle? Before we get into who they pick. Y'all know I'm going with Nvidia all day, every day. Ain't no way no food company gonna outperform Nvidia. Ain't no way. Ain't no way. They ain't even on the same level. But, some of y'all, okay. Most of y'all got Nvidia. Cool. Let's see who Molly Fool picks. The final piece of this analysis revolves around valuation. As seen in the chart below, the price to earnings ratio of Chipotle and Nvidia illustrated vastly different trends. Over the last year, Chipotle's PE has risen considerably, and that's price to earnings, right? Price to earnings ratio. That's what the PE is now sitting at 65.7. By contrast, Nvidia's price to earnings, PE, is far lower than it was a year ago. Anyway, another way of looking at this is understanding that while each stock has risen sharply in the last year, shares of Nvidia are technically cheaper than they were 12 months ago. That's interesting. Why? Because the company's earnings growth is outpacing the acceleration of the stock price. See, that's the thing about Nvidia that I really like, guys. For what they're doing, guys, from an earnings standpoint, I'm talking about triple digit everything. You're talking about a stock price that went up by 400. Their stock price should be higher. See, this is the thing I love about Nvidia. For some reason, I just think people ain't fully bought into the AI thing yet. Because if this was any other industry doing this, man, that stock price would be north of $3,000 a share right now. But for some reason, in the AI arena, people are just not quite ready to buy into it fully. So I just think there's so much upside to Nvidia because of that. But I digress. Let's keep moving. Another way of looking at this is understanding while each stock has risen sharply in the last year, shares in Nvidia are technically cheaper than they were 12 months ago. Why? Because the company's earnings growth is outpacing the acceleration of the stock price. At the end of the day, Chipotle and Nvidia are two very different businesses. The fact of the matter is that Chipotle's fast casual dining is a luxury purchase, while the operating results above indicate that the company can grow. It's important to remember that Chipotle sells burritos. It's not exactly a proprietary business. On the contrary, Nvidia sells a product that businesses of all sizes need. And while competition exists, I think that there are stronger long-term secular tailwinds fueling AI as opposed to the food industry. If anything, Chipotle could become a customer of Nvidia as the company doubles down on its technology investments. Stated differently, AI is so prolific that its applications span a variety of industry sectors, including food and beverage. I don't think the opposite is true, though I don't see any reasons why Nvidia would ever be a Chipotle customer. That's true. Considering the growth narrative surrounding AI coupled with Nvidia's attractive valuation, I think the company is the better option compared to Chipotle. Bingo. Bingo. What a nice little article, man. That wasn't too bad. That was well put. I liked it. I'm still buying Chipotle, though. I'm still going to buy Chipotle. I'm still buying Chipotle. When that thing go 50 to 1, so let's see what that's going to be. I know some of y'all a little quicker than me on math. My little math skills ain't good, so I got to use a computer. What's that, $60 a share, guys? Am I right on that? If it's trading at $3,000 a share, what's that, $60 a share? I'm all in, man. I'm in like Flynn. I'm going to be all over that thing, $1,000 a month, all over it. And again, guys, you got to have a long-term horizon because this thing is not going to go split 50 to 1 and then day 2, it goes up to $1,000, $2,000, $3,000 a share again. It's going to take years. It's going to take years if it ever gets back there. Remember what happened to Amazon. Amazon was at, what, $3,000 a share, $28.50 a share, split 20 to 1. 2 years later, what is it still doing? Dangling in the hundreds. So it takes a while, guys. When you make that kind of move, it takes a while. So don't get in this thing thinking, oh golly, I'm gonna buy Chipotle at 60 and it's gonna be 550 in 3 days. Nope, it's not. May not be 550 for 10 years. So know what you're doing. Please know what you're doing. Know what your time horizon is. Know what you're doing. All right, temperature check, because we're getting ready to get out of here. Let's do a temperature check. Let's temperature check. Last temperature check of the day. Well, not of the day for me, but for this session I'm on. Ooh. One hair under 1140, guys. A smidget. Like, oh! I was just finna say this thing almost hit 1140 while I'm talking, running my mouth. One more refresh. Okay. All right, that's the last temperature check. $1,139.69. We got about $11 to go, and I'm exiting stage left. Just letting you know. But I'm back in on June 10th. So we got, guys, this thing just hit $1,141.42 a share. It's up $45 already this morning. What do y'all think it's gonna do today? Somebody give me a prediction. What do you think this thing gonna close at today? Anybody got a prediction in the chat? Where is Nvidia gonna close at today? Where's it gonna close at? Here's my prediction. I think it's gonna close at 1,160-ish. That's my prediction. Don't mean it's gonna come true. That's the last temperature check. All right, guys, appreciate you, man. Appreciate you. I know we didn't get to the stock market today. I'm out of time. I got some stuff I got to do. I've been in this thing an hour and a half. I can't get to everything I wanted to get to, but tomorrow, I'm back at you. I'm back at you tomorrow, 10:30 a.m. Eastern time. We're going to be talking about Nvidia and more stuff. FYI, Chipotle, I believe it's June 18th, right, guys? Anybody in the chat? When is that 50-to-1 split? 50-to-1 split? Chipotle, I'm in there. $1,000 a share, next 5 years. Just stay in the stock 5 years and see what it can do over the next 5 years. Oh, is it June 28th? Okay, whenever it is, guys. I don't know what the date is. But whatever the date is, I'm all over it. $1,000 a share, $1,000 a month, drip for the next 5 years. So going forward, y'all will see me throw that. I may come up with I'm going to probably add that to the 2.0. I don't think I'm going to do a 3.0 on that. I'm just going to add that to the 2.0. And I'm going to slide that in there with Nvidia. So I got $6,000 a month, 5 in Nvidia, 1 in Chipotle, burrito company. It's a burrito company, so it's going to get $1,000 a month. I got to go with the big boy AI company over the burrito company. I can't go heavy on a burrito company. But I am going to go $1,000 a month, though, for 5 years. And then $5,000 a month for 5 years on Nvidia. And let's watch them over these next 5 years. I'll be talking about them every so often on the YouTube channel. So if y'all want to stick around for that, stick around. Of course, y'all know I already got the 1.0, 50, 30, 20, consistent. So I got the 1.0, 2.0. That's what I'm rocking with. Last thing, we're going to get out of here. Guys, do me a big favor. Get down to that description box. Click on that Moo link. Get yourself ready to go. I told y'all, right now is the time to get ready to go for everything that's getting ready to happen. If you're going to rock with me, copy my plan, you got to get ready to go. Don't get hung up trying to get signed up later on this week and then your little money ain't in your account and ready to go. Because I think when that thing opens on Monday in a week, 9:30 a.m. Eastern time, when that thing opens, you're going to have a flood of retail investors come in. And I think it's going to run the stock price up quick. I don't think it'll maintain itself, but it'll run it up quick. I think it's going to run it up. So let's say it drop at 110 a share. I think it'll run it up to 210, 250 a share within a day or two, because you're going to have a flood of retail investors coming in. I mean, a flood of them, guys. They coming. So all I'm saying is get yourself down in the description box, get your Moo account set up. Let me send you all the information you need for the tutorials so you know exactly how to trade. Make your deposit right away. Link up, make your deposit, boom. So by Thursday, you're ready. Money in the account, already got the training done. I'm ready to rock and roll for that day. And when it get here, hey man, do what you do. Build wealth, but have a long-term outlook. Have your right time horizon, which is your long-term outlook. Make sure you got your risk tolerance right, and make sure you don't put all your eggs in one basket. Do not put all your money in anything. Take a portion of it and understand you're going to need to be in this thing 5 years. Understand this thing will fluctuate. But if you got your mentality right, If you got your logical thinking cap on and you take the emotional thinking cap off, you'll know that. You'll be ready to rock and roll. So get down to that description box, click on that Moo link, put your $100 in, you get 5 stocks, free publicly traded stocks. You put $1,000 in, you get 15 free. So now you got 15 free stocks, publicly traded companies in your portfolio, plus you got your $1,000 and you're ready to buy Nvidia. How you gonna beat that? You can't. You can't, right? And you can buy Nvidia what? Fractional shares. So even if you only got $100 in your account, you can buy fractional shares. Let's say the thing is at 150, 130, and you only got 100 in there. You can still buy a fractional share of it using the Moo app. Some of y'all brokerage accounts can't do that. I'm just saying, some of them can't, some of them can, but I know Moo can. And I know Nvidia is on the fractional share list because I've already double checked it. Some companies are not on the fractional share list, but Nvidia is. So be ready to go, man. Be ready to go. Get down to that description box, click on that Moo link, get your money in there, get your free stock, send me the email. Richard, I'm ready to go. Send me the tutorial videos so that I can learn how to use this thing so I'm ready to rock and roll on June 10th and beyond. And I will send it to you. Send me an email through my website, www.richardfain.net. That's the second link down in the description box is my website. Send me the email through the website. And while you're there on the website, go check out them digital products, man. Make an investment in yourself. Like I told you at the beginning of this thing, the biggest investment you will ever make in your life is in you. You need to get your confidence up. And those training products, those digital products for training the mental to get your confidence up so that you can execute properly, you need that. Make an investment in yourself today, guys. Stop sitting on the sideline looking for somebody else to make an investment in you. Why would anybody else make an investment in you if you won't make an investment in you? It doesn't work that way. You got to make the investment in you. You can't look for somebody else to put something on their shoulders because you don't want to make the investment in you. You don't want to take the chance. You want to put it up. No, you can do this. There's nothing wrong with guidance, guys. But see, guidance is not somebody telling you what to do. Guidance is when someone comes to you and says, hey, this is what I'm getting ready to do. Am I looking at this right? I want to get your opinion on this. This is what I'm going to do, but I want to run it by you to make sure I'm on the right page. See, that's what you should be doing. You should be going to people saying, what should I do? I don't know how much to buy. How many should I buy? Guys, come on, man. You shouldn't even be investing if that's where you at mentally. Shouldn't be putting your money in nothing. Keep it in the bank. Keep it in the bank. That's why it's important to get to the website and get these products so you know what you're doing. So you got a better understanding of the stock market. I got a product called Stock Market Investing 101. Get the product. Read through it. Understand the philosophy. Understand the origins. Understand why you would do this. Then you're ready to go. But you need to make an investment in yourself to do that. So, got the digital products on the website, www.richardfain.net. Second link down in the description box. Go check them out. And then if you want to, join the private mentorship club. We're up to about 500 members, man. We've been doing this thing about 5 weeks. We're already up to about 500 members. And we're having a good time. We're going to have a live stream tonight, a private live stream tonight just for the club members, just for the private mentorship club members tonight at 8 p.m. Eastern time. And I'm going to spend some time answering questions for about 90 minutes to 2 hours. All my club members, they're going to be able to send questions to me through the post that I'm going to post on to the Discord site. They're going to be able to send me questions. And we do this every Monday, guys. This is not like once in a while. We do this every Monday and I show up. I show up and try to show out, right? I'm going to be there. Whether you be there, that's on you. I'm going to be there. I told y'all I'm committed to this. I don't mess around. When I say I'm committed to something, I'm committed to it. And the people that are over there, they know I'm committed to it because I'm there every Monday. I'm there. I'm showing up. Hopefully you'll show up. Hopefully you will be a part of this great community that we're building. It ain't perfect, but to me, I love it. I love it. I love seeing like-minded people in one place towards a common goal, which is financial freedom. I love that. I ain't gonna tolerate no negativity. Ain't gonna be no negativity over there. Not if I see it. I ain't tolerating it. If you ain't about positive, if you ain't about helping folk, don't come over there. Period. Because you won't be there long. I'm not about that. I'm about positivity and helping people. I'm not about people coming over there trying to be experts. You're in the wrong club if you're an expert. You need to go to the expert club. Don't come over to this club because I don't need no experts. I'm the expert in my own opinion, right? I'm the expert in my opinion. But I don't need a lot of experts because people get confused. We got a lot of beginners over there. People are just trying to figure this thing out. I don't need people chiming in, giving their opinion, and it disagrees with what I'm trying to teach. You see what I'm saying? We don't need 5 or 6 opinions in there. I'm not saying you can't tell people, hey, this is the strategy I'm using. That's okay. But when you go to try to tell people what to do, that's what we can't do over there, right? And the folks that rock with me know that we respect one another. As long as we respect that one rule, you're okay with me. I don't mind you doing whatever you do, but do not try to sell nothing over there, and do not try to act like you're the expert over there and tell people what they should be doing. Those 2 things will get you excommunicated. So get down to the website, man. Click on that link. Go check it out. Give me a follow on Instagram. Last thing, give me a follow on Instagram down in the description box. Guys, you know I appreciate y'all. Thank y'all for rocking with me on a Monday. Hopefully I gave you some food for thought, some financial food for thought. Think through some of this stuff. And like I said, hey, get your game plan ready to go. Let's get ready to take off here, man. Strap in, get ready to take off. This rocket ship is going to take off. And I think this rocket ship is going to be one of the biggest and fastest and most exhilarating rocket ships I've ever been on. And I'm on it. I'm on this thing strapped in first class seat. I'm in the first class seat. You get the drinks and the food and everything. I'm right there. So hopefully you'll join me, man. Hopefully you'll join me. Well, thank y'all, man. Lock it in with a thumbs up before you get out of here. Lock that thing in with a thumbs up for the algorithm. I really would appreciate it. Thank y'all so much, guys, for rocking with me today. Y'all know I appreciate y'all. I'll be back tomorrow, 10:30 a.m. Eastern time. Thoughts become things. See it in your mind. Hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Never stop believing in yourself. Stay healthy. Get wealthy. Catch you guys on the next one. Peace.